Fintech startup Marqeta will make its Wall Street debut today. The company pricing 45 million shares at $27 each. It's above the target range. The company, which was number 7 on CNBC's disruptor list, will trade on the NASDAQ under the symbol MQ. Joining us right now is the company's CEO, Jason Gardner. Jason, congratulations on this moment. You're upstairs, we're downstairs, but nice to see you nonetheless. Talk to us about this moment for your company. Your business is now, I think, 11 years old, and it has come quite a far way in a very short amount of time.
Yeah, thank you for having me. It's a very, very exciting day for Marqeta. And in over 11 years, I mean, many people, many hands, many minds have built what you see today. And this is another step in our journey, so we're very excited about this.
Let's talk about the business itself, and let's talk about the various revenue sources, how investors should think about this company in terms of comps, in terms of multiples. When you think about the comps and multiples and you put it on a whiteboard, who are they?
So we created modern card issuing. Today in the United States, there's $6.7 trillion of carded volume, and we are simply scratching the surface with $60 billion in volume. Companies like Square, DoorDash, Instacart, Klarna, Affirm build Visa and MasterCard payment cards on our platform. They're physical plastic, they're tokenized to fit into Apple Pay or Google Pay or Samsung Pay. They can be virtual. Consumers use these to buy now, pay later. It reduces fraud at the point of sale for DoorDash. So if you think about all the payment companies out there, if you really believe that everything from a payment perspective is moving to modern platforms, is being digitized, cash to card, there are many payment companies in the market today who believe in that, that's going to happen, and Marqeta is certainly one that believes in that, and we've proven that with our growth over the last 7 years.
Can you explain to the audience a little bit more about the business, but specifically, I think about your business in some ways as an arbitrage. You may not like this, around interchange fees between the smaller community banks that benefited from the Durbin Amendment after the financial crisis and the big banks.
Yeah, the Durbin Amendment was created back in 2010 to protect consumers and protect small banks. Companies like Marqeta, we derive our revenues from interchange. We take a portion of interchange. We share that back to our customers. We share that to the acquiring side, something you and I do every day, which is pay at the point of sale, and to the networks as well and the banks. This has sustained lots and lots of companies around the world, companies like Marqeta. We have built this product to serve customers. They build on top of our platform. And we either support their core business or we are their core business. So this really affects a lot of consumers at the point of sale. Their ability to use Klarna or Affirm to buy now, pay later, or order their food on an app like DoorDash or Instacart. So that interchange is shared amongst a lot of different companies and a lot of businesses, and the Durbin Amendment was created to protect these businesses, the small banks and consumers.
Is there any risk over time that interchange fee effectively gets compressed, either because of government policy or competition?
Nothing we see on the horizon. There's been no talk that we've heard about the Durbin Amendment being taken away that would adversely affect these small banks and adversely affect consumers. And we operate outside the United States. We operate in 36 countries today where interchange actually is not high like it is in the U.S. And we have created business models that have been able to support us, and especially in Europe.
When you think of being a publicly traded company, having the currency of a stock, do you start to think about acquisitions and what this company may look like 5 years from now? The reason I ask is there are so many fintech companies that have gone public even in the last, say, 12 or 18 months, and I imagine at some point there will be consolidation.
Lots of opportunity around the world, and our plan is to grow organically and grow inorganically where we see it being strategic and opportunistic. Marqeta builds a specific way. We build the Marqeta way and how we build around the world. And if we look at acquisition and decide, and you're correct, there's lots of fintechs around the world that look at different parts of the ecosystem. And we operate in 36 countries today, we obviously want to grow that. How we enter countries, again, organically, inorganically, but it has to be strategic and it has to be opportunistic.
Business model question. You mentioned the international component of the business versus the U.S. business, the interchange fees in the U.S. The interchange fees, as you said, elsewhere are much lower. In terms of both revenue and profit, if we were to look at a pie chart, how much of it does the U.S. represent? How much does the international piece represent?
Well, today, our revenue is 98% out of the United States, only 2% internationally. But $30 trillion of carded volume happens outside the United States. And that's tremendous. So we're just scratching the surface there as well. Yeah, it's a different business model because you don't have the level of interchange that you have in the United States. Outside the U.S., you do internationally. And keep in mind, the ability for merchants to accept payment cards, whether online or offline, is a global phenomenon. The ability for us to provide services through our platform is another way for the company to generate revenue. And obviously, the opportunity outside the U.S. is tremendous.
Shepard Smith here. Thanks for watching CNBC on YouTube.